The moment you stop caring whether you're successful is the moment you become successful. The moment you stop needing to be right is the moment you start being profitable. The moment trading becomes boring is the moment your edge becomes operational. Everything that feels like progress is regression. Everything that feels like regression is progress. You're swimming upstream thinking it's downstream because everyone told you passion and excitement and conviction equal success. They don't. They equal volatility. Real success in trading is the systematic elimination of everything that makes you feel like a trader. The excitement, the fear, the ego, the identity. Until all that's left is execution without attachment. And if that sounds like death to you, you're not ready. But if it sounds like freedom, you're closer than you think. So let me be really direct with you about why you're here and what's actually happening in your trading right now. You have no idea if you're improving or deteriorating. You're making changes to your trading. More discipline, better risk management, following your plan more consistently. But you don't know if these changes are actually moving you toward profitability or if they're just creating the illusion of progress. You feel good some days and terrible others, and you're using those feelings to gauge success when feelings are completely disconnected from actual trading performance. The core pain you're experiencing, the thing that brought you to this video, is that you're flying blind. You're making decisions about your trading based on how you feel, how confident you are, how much you're winning, how exciting it is. And all of those metrics are lies. Complete lies. You feel confident right before you blow up. You feel lost right when you're actually improving. You win a bunch of trades and you think you've figured it out right before the market teaches you that you haven't. You have no reliable feedback mechanism that tells you, yes, you're on the right track, keep going, or no, you're deluding yourself, change course. So you oscillate between overconfidence and despair, never knowing which is accurate, never knowing if you should keep doing what you're doing or completely change everything. The core misunderstanding that's keeping you trapped is this. You think being on the right track means feeling good about your trading, winning more trades, being confident in your analysis. It doesn't. Those are lagging indicators at best and deceptive signals at worst. Being on the right track means behavioral consistency regardless of outcomes, emotional flatness regardless of results, indifference to being right or wrong about individual trades, process adherence that's boring and repetitive and feels like you're not even really trading anymore. None of those feel like success. They feel like you're losing your edge, like you're becoming mechanical, like you're losing the passion that made you want to trade in the first place. But that feeling, that sense that something's dying inside you, is actually the indicator that you're finally developing a real edge. What I'm going to give you in this video are 5 specific counterintuitive signals that indicate you're on the right track in your trading. Not profit and loss metrics, not win rate, not confidence or excitement or any of the things you've been using to measure yourself. Behavioral and psychological signals that precede sustainable profitability. I'm going to show you why emotional flatness is success, not depression. Why uncertainty indicates learning, not ignorance. Why boredom means your process is working, not failing. Why reduced position sizing often precedes breakthroughs, not setbacks. And why the absence of strong opinions is a sign of mastery, not weakness. These aren't feel-good affirmations. These are diagnostic criteria that separate traders who are actually improving from traders who are just experiencing variance and mistaking it for skill. Here's the unique insight that's going to change everything for you. Success in trading is invisible to the person experiencing it. You cannot feel yourself improving because improvement means becoming less reactive, less emotional, less attached to outcomes. And the absence of reaction feels like the absence of life when you're used to intensity. The right track doesn't announce itself with wins and confidence and excitement. It announces itself with indifference and consistency, with the weird calm of someone who's stopped needing the market to tell them who they are. Every trading educator tells you to track your metrics: win rate, risk-reward ratio, profit factor. Those matter eventually. But they don't tell you if you're on the right track psychologically, which is the only track that actually matters. Because you can have great metrics for 6 months and be on the wrong track if those metrics are built on unsustainable psychology. You can be winning and still heading toward a blow-up. I'm going to show you how to assess whether your internal state, your relationship to risk, to outcomes, to your identity as a trader, is developing in the direction of long-term survival. Because survival precedes success, and you can't survive if you don't know what survival looks like from the inside. And we're going to bust this myth wide open right now, that you'll know you're succeeding because you'll feel successful. You won't. You'll feel nothing. Or worse, you'll feel like you're regressing, like you're losing your passion, like you're losing your edge, like you're losing your identity as a trader. And that feeling of loss is actually the feeling of growth, of shedding the parts of you that can't trade profitably. Most traders abort the process right when it's working because it feels like it's not working. They go back to what feels exciting, what feels like trading, what gives them the emotional intensity they've confused with being alive, and they stay trapped forever. Let me paint you a picture because I think this thought experiment is going to really land for you. I want you to imagine something strange with me. Imagine I give you a trading robot, fully automated, black box. You can't see inside it. You don't know its logic. You have no idea what indicators it's using, what strategy it's following, what rules it's executing. But I tell you this robot has a 55% win rate, risk-reward of 1 to 2, and it will grow your account by an average of 18% annually over any 10-year period. Guaranteed. Mathematically certain. I can prove it to you with back tests and forward tests and real money results. But here's the catch. You have to watch it trade. Every single trade. You see every entry, every exit, every winner, every loser. You watch it take 5 losses in a row and keep executing the same strategy. You watch it exit winners early that then double without it. You watch it hold losers that eventually stop out for full losses. You watch it pass on setups that look perfect and run without it. You watch it take setups that look terrible and lose. You watch it do everything that would make you question whether it actually knows what it's doing. Could you watch that robot without interfering, without turning it off after a losing streak because clearly something's broken, without improving it by adding your intuition or your analysis or your feeling about the market? Most traders couldn't. They would sabotage a guaranteed winning system because the day-to-day execution doesn't feel like winning. It looks random. It looks like the robot is making mistakes. Looks like it's leaving money on the table by exiting winners too early. Looks like it's being stubborn by holding losers too long. The moment-to-moment experience of watching that robot would be maddening because you can't see the statistical edge manifesting in real time. Now here's the disturbing truth that I need you to really absorb. You are that robot, or at least you could be. If you follow your process consistently, if your process has genuine edge over thousands of executions, you will be profitable over time, mathematically, inevitably. But the daily execution, the weekly results, the monthly experience will look and feel like you're doing it wrong. The right track doesn't feel right because the sample size of your daily experience is too small to see the statistical edge manifesting. You're living inside the noise and trying to judge the signal. When you're on the right track, you're essentially being a robot, following predetermined rules, executing process without emotion, experiencing variance that looks like mistakes, feels like failures, seems like evidence that the system is broken, and the only way to stay on that track is to become indifferent to what it looks like and feels like in the short term. To trust the math over the emotion, the system over the outcome, the process over the result. And that requires killing the part of you that needs to feel like you're doing well in order to keep doing what you're doing. That part of you has to die, and its death feels like your death, but it's not. It's birth, the birth of the trader you need to be. Let me give you another way to think about this because I think this metaphor is going to help you see what's actually happening when you're on the right track. Think about a gardener planting seeds. They prepare the soil, plant the seeds, water them, provide the right conditions, and then what happens? For weeks, maybe months, nothing visible happens. The garden looks dead. Just dirt. No flowers. No vegetables. No growth that you can see. An outside observer looking at that garden would say, "This person is failing at gardening. Nothing's growing. They're wasting their time. They should dig everything up and start over with a different approach." The gardener might even question themselves. Did I plant these seeds wrong? Are the seeds defective? Is the soil not right? Should I dig them up and check if anything's actually happening down there? And here's the critical moment. If the gardener panics, if they dig up those seeds to check on them, to see if roots are forming, they destroy the entire process. They kill the very thing that was growing. The key to successful gardening is tolerating the period where it looks like nothing is working, where all evidence suggests you're wasting your time, where doubt creeps in and tells you to abandon this and try something else. Trading is identical. When you're on the right track, when you're developing real edge, when you're building the psychological foundation for sustainable profitability, there's often this period where nothing visible improves. Your account might be flat, might even be slightly down. Your win rate doesn't change. You're not getting dramatic results. You're not seeing the breakthrough you expected. And it feels like all this work, all this discipline, all this process adherence, all this emotional regulation you're practicing is for nothing. It feels like you're doing all the right things and getting none of the results. But underneath the surface, invisible to you and invisible to everyone watching, psychological roots are growing. Deep roots, strong roots. You're developing the capacity to execute without attachment, to hold through drawdowns without panic, to take profits without euphoria, to absorb losses without trauma, to show up day after day regardless of recent results. You're becoming the trader who can compound edge over decades instead of the trader who has a good year and then blows up. You're building something that lasts. The problem is that this growth period looks and feels like failure, like nothing's working, like you should abandon this approach and try something else, something more exciting, something that produces faster results. And most traders do exactly that. They dig up the seeds right before they would have bloomed. They change strategies, change systems, change their entire approach, right when consistency was about to pay off. Because they cannot tolerate the phase where growth is invisible, where the right track doesn't feel right. So if the right track doesn't feel right, if it looks like nothing from the outside, if it feels like you're dying inside, how do you actually know you're on it? What are the specific signals that tell you, yes, this is working, keep going, even though every fiber of your being is screaming that it's not working? Let me give you the first diagnostic signal, and this one's going to sound completely backwards to you. Are you becoming more emotionally flat about wins and losses? If yes, you're on the right track. If no, if you're still experiencing emotional roller coasters with each trade, with each win making you feel like a genius and each loss making you feel like a failure, you're not on the right track yet. When you're developing real edge, your emotional response to outcomes diminishes. A winning trade produces mild acknowledgement, not euphoria. Oh, that worked. Moving on. A losing trade produces mild observation, not devastation. That didn't work. Next. This happens because you're starting to see trades as statistical events in a probability distribution rather than personal victories or defeats. You're starting to understand at a gut level, not just intellectually, that any individual trade is essentially a coin flip with slightly biased odds, and getting excited or devastated about a coin flip is insane. Here's the paradox that trips everyone up. Emotional flatness feels like depression or loss of passion. It feels like you don't care anymore, like trading is becoming meaningless to you, like you've lost the thing that made you want to be a trader in the first place. But that flatness is actually detachment. which is the absolute prerequisite for profitable trading. You cannot trade profitably while emotionally attached to outcomes. The intensity you're mourning, the passion you think you've lost, that was the problem, not the solution. That was the addiction to volatility. That was your ego needing the market to validate you. Most traders interpret flatness as a warning sign. They think, I've lost my edge. I need to feel passionate again. I need to feel alive. So they increase position size to feel something. They chase excitement. They take riskier setups. They create artificial intensity to replace the natural intensity that's fading. And in doing so, they sabotage themselves right when they were about to become profitable, right when the emotional detachment they were developing was about to become their greatest asset. Let me reframe this for you in a way that might help it land. If trading is becoming boring, congratulations. If wins don't thrill you anymore, you're progressing. If losses don't crush you anymore, you're healing. The goal isn't to never feel anything. You're human. You're going to have feelings. But the goal is to stop using feelings as a decision input, to execute regardless of emotional state, to trade when you're happy, sad, anxious, calm, doesn't matter. The execution is identical. And that requires emotional intensity to fade into background noise, to become something you notice but don't act on. Second diagnostic signal. Are you becoming less certain about what the market will do? If yes, right track. If no, if you're developing strong opinions and convictions about market direction, if you're feeling more confident in your predictions, wrong track. This sounds completely backwards. Shouldn't expertise create confidence? In every other domain, yes. When you become an expert chef, you're confident in your cooking. When you become an expert carpenter, you're confident in your woodworking. But trading isn't like other domains. Trading is about navigating fundamental uncertainty. And expertise in trading means understanding that the market is fundamentally unpredictable, that any outcome is possible, that your analysis can be perfect and you can still lose, that the best trade setup in the world still has a meaningful probability of failure. True expertise in trading is comfortable uncertainty. It's being okay with not knowing. It's holding multiple contradictory possibilities in your head simultaneously and being fine with the ambiguity. When you're on the right track, you stop making predictions. You stop having strong opinions about what the market will do. You stop feeling like you know what's going to happen next. Not because your analysis has degraded, not because you've become less skilled, but because your understanding has deepened. You see complexity where you used to see simplicity. You see probability distributions where you used to see certainty. You see all the ways you could be wrong where you used to see only the ways you'd be right. Here's a practical indicator of this. If someone asks you, what do you think the market will do? And your honest answer is, I don't know. But here's how I'm positioned. Given the current structure, you're on the right track. If your answer is, I think it's definitely going to go up because of XYZ, you're on the wrong track. Certainty in trading is inversely correlated with profitability. The more certain you are, the more dangerous you are. To yourself, to your account, to your future. The traders who blow up are always certain. They know this stock is going to the moon. They know this is the bottom. They know this pattern always works. They know. And that knowing, that certainty, is what gets them killed. Because when you're certain, you can't adapt. You can't adjust. You can't be wrong. Your ego is attached to your prediction. And when the market shows you something different than what you predicted, you can't see it because seeing it would mean admitting you were wrong. So you hold losing positions. You add to losers. You turn small losses into catastrophic losses because you'd rather be proven right eventually than cut the loss and admit you were wrong now. Third diagnostic signal. Are you more focused on whether you followed your process than whether you won or lost? If yes, right track. If no, if you're still primarily tracking and caring about profit and loss, about whether you made money today or this week, wrong track. When you're on the right track, Your definition of success shifts fundamentally. It shifts from outcome to execution. A perfectly executed trade that loses money is a success. An imperfectly executed trade that makes money is a failure. This sounds insane to most traders. How can a losing trade be a success? How can a winning trade be a failure? But here's the logic, and you need to really understand this because it's everything. Your process, if it's sound, if it has genuine edge, has positive expectancy over thousands of executions. Any individual execution can win or lose based entirely on variance, on randomness, on factors beyond your control. If you deviate from process and win, you've just reinforced bad behavior. Your brain learned that deviation leads to reward, and it will push you to deviate again and again, until eventually you deviate at the wrong time and it costs you. If you follow process perfectly and lose, you've reinforced good behavior. Your brain is learning that following process is what you do regardless of outcome. And over time, over thousands of trades, process adherence compounds into profit. Process deviation compounds into catastrophe. Here's a practical test you can do right now. After each trade, ask yourself one question. Did I execute according to my rules? Not did I make money. Not was I right about direction. Just did I follow my process? If the answer is yes, regardless of whether you won or lost, you mark that trade as a success in your journal. Over weeks and months, you track your process success percentage, and what you'll discover is that process success percentage matters infinitely more than win percentage. When your process success is consistently above 90%, profitability follows automatically, not immediately, not in a straight line, but inevitably, because you're executing edge consistently. And edge, executed consistently over sufficient sample size, produces profit. That's just math. Fourth diagnostic signal. Are you naturally gravitating towards smaller position sizes relative to when you started trading? If yes, right track. If no, if you're consistently trying to make more per trade, trying to maximize every opportunity, wrong track. This is deeply counterintuitive. Shouldn't skill and confidence allow you to trade bigger? Shouldn't getting better mean being able to risk more? In theory, yes. In practice, what actually happens is that real edge reveals itself as smaller than you thought. As you get better, as you understand markets more deeply, you realize I actually don't have as much edge on any single trade as I believed when I started. My edge is statistical. It's spread across many trades. It exists in the aggregate, not in the individual. So individual position size should be small enough to allow for the maximum number of executions without blowing up during inevitable drawdown periods. Beginners overtrade position size because they have false confidence. They think they know. They think this one's a sure thing. They think they've found the trade that can't lose. Intermediate traders who are on the right track scale down because they have accurate confidence. They understand probability. They know any trade can lose. They size positions so that even 5-10 losses in a row doesn't materially damage their ability to keep trading. Advanced traders might scale back up, but from a foundation of humility, not bravado. From statistical understanding, not emotional need. Here's the wisdom embedded in this. If you find yourself thinking, this position size feels too small, given how good this setup looks, you're probably sizing correctly. If you're thinking, I need to make this count, this could be the one that changes everything, you're probably sizing incorrectly, and your ego is involved. Right track sizing feels conservative and boring, and like you're not maximizing the opportunity. Wrong track sizing feels aggressive and exciting, and like you're really trading now. Fifth diagnostic signal. Are you becoming more flexible, more willing to be wrong, more comfortable changing your mind mid-trade? If yes, right track. If no, if you're digging into positions, defending your analysis when the market's not confirming it, needing to be proven right, wrong track. Mastery in trading looks like indecisiveness to outsiders. It looks weak. It looks like you don't know what you're doing. Someone asks you, "Why'd you exit that position? I thought you said it was going to 100?" And you say, "Because new information changed the probability distribution and my framework said to exit." But that sounds like you were wrong. And you have to be okay with that. You have to be okay with looking like you don't know what you're doing. Because flexibility, the ability to change your mind without ego damage, without feeling like you were wrong, without needing to defend your original thesis, that's what allows you to survive. When you're on the right track, your relationship to your own analysis changes fundamentally. You stop making your analysis mean something about your intelligence. You hold it loosely. You're skeptical of your own conviction. You're the first person to question your own thesis. You're willing to flip your position if the market shows you something different than what you expected. Not because you're wishy-washy, not because you lack conviction, but because you understand that your conviction is a liability, not an asset. That strong opinions about uncertain outcomes lead to inflexibility, and inflexibility in markets leads to death. Here's a diagnostic question you can ask yourself. When someone challenges your trade idea, when someone says, "I think you're wrong about this," do you defend it, or do you genuinely consider whether they might be seeing something you're missing? Defensiveness indicates ego attachment. You've made the trade about being right, about being smart, about being the person who knows. Openness indicates detachment. The trade is just a trade. It's a bet with uncertain outcome. And if someone sees a flaw in your logic, great. You'd rather know now than find out the hard way. Detachment is the right track. Ego attachment is the wrong track. So if these are the signals, if these are the diagnostic criteria, emotional flatness, uncertainty, process focus, smaller sizing, flexibility, how do you cultivate them? How do you move yourself toward these indicators when everything in you is pulling toward excitement, certainty, outcome focus, bigger bets, rigid opinions? Because knowing what the right track looks like doesn't automatically put you on it. First practice, track your emotional intensity daily. Create a simple scale, 1 to 10. Where 1 is completely flat emotional response to trading, you could take it or leave it, barely registers. 10 is intense emotional roller coaster. Every trade is agony or ecstasy. Your mood is entirely determined by your last trade. Track your number every day. Just one number in a journal. And your goal over weeks and months is a downward trend. Not toward 1, which might indicate complete disconnect or depression, but toward 3 or 4. Calm engagement, present but not attached. Trading matters, but it doesn't define you. You're not trying to feel nothing. You're not trying to become a robot with no emotions. You're trying to feel less about outcomes, to have your emotional state be less dependent on whether you won or lost today. And tracking this daily gives you feedback that you can't feel in the moment. You might not notice that you're becoming less emotional about trading. But when you look back at 3 months of data and see that your average score has dropped from 8 to 4, you have objective evidence that you're on the right track even if it doesn't feel like progress. Second practice, journal I don't know moments. Every time you catch yourself about to make a prediction, about to state something as certain about what the market will do, pause and write. Instead, I don't know if X will happen, but given current structure, I'm positioned Y. You're training yourself out of certainty language, out of prediction mode. Replace "this is definitely going to happen" with the "probability seems to favor this, but anything is possible." Replace "I know this stock is going to the moon" with "I'm positioned long, with defined risk, because the setup meets my criteria." This isn't semantics. This is rewiring how your brain relates to the market. Every time you practice uncertainty language, you're weakening the neural pathways that connect your ego to your predictions. You're strengthening the pathways that connect you to probabilistic thinking, to humility, to flexibility. Language shapes thought. Thought shapes behavior. Behavior shapes results. Third practice, grade every trade on process, not outcome. After each trade closes, give yourself a grade. A means-perfect process execution. Every rule followed, every criterion met. Entry was systematic. Management was according to plan. Exit was predetermined or based on framework. B means minor deviation. Maybe you entered slightly early or exited slightly late, but basically followed the plan. C means major deviation. You ignored a rule. You added to a loser emotionally. You exited based on fear, not framework. F means complete abandonment of process. You just did whatever felt right in the moment with no reference to your plan. Track only these grades. Not whether the trade won or lost, not how much you made or lost, just the process grade. And at the end of every week, calculate your process grade average. Your target is 90% A and B grades. When you hit that consistently for multiple weeks in a row, profitability follows automatically because you're executing EDGE consistently. And EDGE, executed consistently, produces profit over time. That's the only thing that produces profit over time. Not being smart, not working hard. Consistent execution of EDGE. Fourth practice, the size down challenge. For your next 20 trades, deliberately reduce your position size by 25 to 50% from what feels comfortable, from what you've been doing. Journal how this feels. Most traders report the same pattern: initial discomfort. It feels like you're not really trading, like you're wasting opportunities, like you're being too conservative. Then relief. A weird sense of breathing room, like you can think more clearly, like each trade matters less, and that's actually good. Then clarity. You start seeing that smaller size allows better decision-making. You're less emotionally invested in each outcome, so you can be more objective about whether the trade is working or not. The initial discomfort tells you your sizing was ego-driven. You were sizing for excitement, for significance, for making each trade count. The relief tells you the new size matches your actual edge. The clarity tells you that smaller size is actually a competitive advantage because it allows you to think and execute without emotional interference. Fifth practice, flexibility exercise. Once per week, take a position you're currently holding and write down 3 specific scenarios where you'd be completely wrong and should exit immediately. What would the market need to show you to invalidate your thesis? Be specific. If you're long because you expect earnings growth, what earnings number would invalidate that? If you're long because you expect a technical breakout, what price action would invalidate that? If you're long because of sector strength, what would indicate sector weakness? This trains you to hold ideas loosely, to stay attached to process, not outcome, to be flexible rather than rigid. And when one of those invalidation scenarios occurs in real time, you have a predetermined decision. You don't have to think about whether you're wrong. You already decided what wrong looks like. You just execute the exit. This removes ego from the moment of truth. You're not admitting you were wrong. You're following your predetermined framework. And that makes all the difference. Let me bring this all home now because I need you to understand something that's going to sound strange, but is absolutely crucial to your survival as a trader. You came here wanting to know if you're on the right track, wanting some way to evaluate whether all this work you're doing, all this discipline, all this process, is actually moving you toward profitability or just keeping you busy. And what I've shown you is that the right track doesn't feel like the right track. It feels like you're losing your edge, losing your passion, becoming mechanical, becoming boring, losing everything that made you want to be a trader in the first place. Everything that feels like success, confidence, excitement, strong opinions, big wins, those are actually warning signs. Those are the feelings that precede most traders' worst moments. Everything that feels like regression, uncertainty, emotional flatness, obsession with process over outcome, those are the signals that you're finally developing into a real trader. Someone who can survive. Someone who can compound edge over decades instead of blowing up spectacularly after one good year. We walk through why the feelings lie, why emotional intensity is not passion, it's attachment, why confidence is not expertise, it's often delusion masquerading as knowledge, why excitement is not engagement, it's addiction to volatility, Why the absence of those feelings, the flatness you're interpreting as depression or loss of passion, is actually detachment, which is the goal, which is the only psychological state from which profitable trading is possible. We looked at 5 specific signals: emotional flatness replacing roller coasters, increased uncertainty replacing false confidence, process obsession replacing outcome obsession, naturally smaller position sizes replacing aggressive sizing, flexibility replacing rigid opinions. None of these feel like success when you're experiencing them. All of them indicate that you're on the right track, that the roots are growing underground even though you can't see the flowers yet. And we got practical with tools you can implement immediately. Track emotional intensity daily and aim for downward trend. Journal uncertainty instead of certainty. Grade trades on process, not outcome. Deliberately size down to find your actual edge. Practice flexibility by writing invalidation scenarios. These aren't just exercises. These are the cultivation of the psychological foundation that precedes all. Sustainable profitability. Here's what I need you to understand at the deepest level. Success in trading is invisible and feels like nothing. You're expecting it to announce itself with wins and confidence and excitement and the feeling that you've finally made it. It won't. It'll announce itself with boredom and flatness and indifference, with the strange calm of someone who's stopped needing external validation, with the quiet consistency of someone who's realized that trading is just execution of process, nothing more, nothing less. And if you can't tolerate that, if you need trading to make you feel alive, if you need the market to tell you you're smart or capable or special, you'll sabotage yourself forever. You'll abort the process right when it's working because it doesn't feel like it's working. The right track is the death of who you were, the excited trader, the confident trader, the passionate trader who needed wins to feel whole and losses to feel destroyed. All of that has to die, and in its place, something quiet and consistent and boring is born. The trader who executes regardless of feeling, who survives regardless of outcome, who compounds edge over decades because they're not burning out on emotional intensity, who's still here in 10 years because they learned to measure success not by feeling but by behavior. Your mantra, the thing I want you to say to yourself every single day, the thing I want you to internalize until it becomes part of your operating system, is this: I am not here to feel successful. I am here to be successful. I am not here to feel alive through trading. I am here to execute process. My emotional flatness is not depression, it is detachment. My uncertainty is not weakness, it is wisdom. My boredom is not death, it is the birth of real edge. I am on the right track not because it feels right, but because I am doing right. Consistently, mechanically, boringly, regardless of how it feels, regardless of whether it looks like progress, regardless of whether anyone else would recognize this as success. This is the shift. This is what it means to know you're on the right track, not because you feel good, not because you're winning, not because you're confident, but because you feel nothing and you keep going anyway, because you're uncertain and you execute anyway, because it's boring and you show up anyway. That's the track. That's the only track that leads to sustainable profitability. If this resonated with you, if you see that you've been measuring success with an upside-down ruler, if you recognize that what felt like progress was actually regression, and what felt like regression might actually be progress, hit that like button. Not for me, for you. As acknowledgement that you're ready to recalibrate, that you're willing to die the death required to become the trader who survives, that you're willing to embrace the boring, flat, indifferent psychological state that precedes all real success in trading. Drop a comment and tell me which of these 5 signals do you recognize in yourself right now. Are you becoming more emotionally flat about wins and losses? Are you becoming more uncertain about predictions? Are you focusing more on process than outcome? Are you naturally sizing down? Are you becoming more flexible? Name it. Claim it. Because naming progress that doesn't feel like progress is how you convince yourself to stay on the track when everything in you wants to jump off. And if you want more of this, if you want trading psychology that doesn't lie to you about what success feels like, that doesn't pretend the path is exciting and validating and confidence-building, subscribe, because I'm committed to telling you the uncomfortable truth. The right track feels wrong. The path to profitability feels like loss. The development of edge feels like the death of everything you thought trading was supposed to be. And until you accept that, you'll keep aborting the process right when it's working. You're on the right track, not when you feel like you are, but when you don't feel much at all, and you execute anyway. When trading becomes boring, and you show up anyway. When wins don't excite you, and you keep trading anyway. When losses don't destroy you, and you keep trading anyway. That's the track. That's where the money lives. That's where survival lives. That's where the decades-long career lives. Now go be the boring, consistent, emotionally flat trader you need to be. Go become the person who trades like a robot while staying human enough to adapt. Go embrace the death of the excited, confident, passionate trader and become the calm, uncertain, indifferent executor of edge. That's everything. That's the entire game. That's the right track. And now you know what it looks like. Now you know it doesn't look like anything, doesn't feel like anything, just is. Just executes, just survives, just compounds. Go be that. You're closer than you think.